With us Mr. Partha DeSarkar, the Group CEO at Hinduja Global Solutions, joining us. They did a recent tie-up in the UK region, so let's try and understand the impact of that. Hi, sir. Thanks so much for making time and speaking with us. Well, you've been, selected as a strategic partner for the UK Public Services. What kind of opportunity does it throw up, and when will the revenue accretion start?
That's a great question. The revenues build in this year itself. We've started recruiting, and we'll see part of the revenues come in this year, but the full revenues will be only visible next year. Unfortunately, I'm not at a liberty to disclose the exact size of the contract, but I can tell you more about what it is. It is about one login access to all public sector portals that the government of UK has for use by consumers. And we are going to enable the access, and we're going to support the UK government in helping its consumers access all public services through this one login portal. That's what this is. It's digital in nature because these are mostly digital access services. We're very happy to be able to win this contract. And this is a multiple year contract. However, the exact value of the contract is not something that I will be able to reveal at this point of time.
Okay, you can't tell us the value of the contract, and it's a multi-year contract, but what about the UK region as a whole? Because UK business had seen a bit of a dip in revenue last quarter. Are you expecting a recovery now, given this order inflow as well?
We had a lot of revenues dependent upon two factors. One was we helped the government during the Brexit process. So as Brexit is now scaling down, so that's one of the reasons for the dip in that revenue. The other reason why the revenue is dipped is also we were providing the helpline for COVID track and trace. Now with COVID itself going down, the volumes have declined significantly, because you recall that last 2 years have been the raging pandemic, and we had to provide all kinds of support to the UK government to fight the pandemic. Now, thankfully, that nightmare has ended. So COVID's now almost on its way out. As a result of that, those revenues have declined. However, we still have the government to support over booster campaign that it does, because this is now more a seasonal kind of a flu. And we will be supporting them for booster campaigns. Those are seasonal projects which will have sharp ramp ups and ramp downs. But the reason you're seeing the dip in revenues in UK that you mentioned is because a significant part of those revenues came from two contracts. One was Brexit, which is on its way down, and the other was for supporting the government in its attempts to track and trace COVID.
Okay, point taken. So Brexit as well as that COVID program was the main reason of that big jump up that we have seen. But talk to me about the outlook of the CX business, and what about the technology business?
I think we will try to make the growth. Our normal growth has been 10% on a year-on-year basis. We're trying to achieve the same sort of numbers even this year. There is a little bit of a slowdown. I can't deny that. So we are hoping that because of our change in focus to the market, we may still be able to build momentum to hit that number. But that's where we are as of September.
Okay, so you're still aspiring for the 10% growth despite the slowdown that you're seeing in some territories. But what's been the client addition? What does the order pipeline look like? And any partner-led deals or M&As which are in talks?
Right now we sell technology through a partner-led growth. One is the contact center, cloud contact center piece. So we are partnering with the usual technology players like AWS Connect. We are partnering with Twilio. We are partnering with Genesis. We are partnering with Sprinkler, Automation Anywhere, UiPath. So all those are our partners. Depending upon what exactly we are selling, the partner-led strategy is going to be a very important part of our growth strategy.
Quickly on the margin front as well, has the impact of wage hike played out in Q1, or it will play out in Q2? And overall, what's the margin target for the year?
I think we're going to improve our margins. I won't be able to give you a specific guidance. We don't give a margin guidance. But yeah, we're going to improve beyond what we had last year.
Okay, so you can't give me a number, but nonetheless, the margins in FY24 will be better than what we saw in FY23. Thank you, sir, for making time and speaking with ET Now. I appreciate you joining us on the show. But shifting